Hello traders everywhere, Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Monday the 14th of January. Just one more day and silly season ends. Surprise, Apple's iPhone sales aren't going as well as they expected. The so-called surprise Apple is not selling as many iPhones as first expected is no surprise to MarketClub members because we actually predicted this over 2 months ago. And when I show you in today's chart exactly what we're predicting for Apple right now and why the picture may be not quite as rosy as everybody expects. So let's go to our portfolio manager as we normally do. And we're going to go right to look at the S&P 500, which actually gave a signal to be a buyer last week, and it's down again today. So there's the signal right there at 1467. It's 1468, about unchanged from where we are, but it's still looking toppy for me, and we haven't had the confirmation in either the Dow, you can see it right now, or the NASDAQ. Both of those markets still are showing a monthly trade triangle that's red, which is a negative sign. Plus, we're very overbought. So it would have been a much more powerful signal in my mind on the S&P had we seen it in both the Dow and the NASDAQ. Not to say it won't happen, but the reality is it just isn't there right now. So let's go on to, so I think for the most part, the equity market is going to be somewhat neutral. You see the 60 here, which means it's trading range. Nothing to get too excited about, both on the upside or the downside right now. And the reason we say it's in a trading range in the NASDAQ and the Dow is simply because you have a situation where you have a conflict. And the conflict is you've got a monthly that's pointed up and you have a weekly that's pointed, the other way around. You've got the weekly that's pointed up and the monthly that's pointed down. So again, not good signals, conflicting signals. A 60 is a trading range, so I expect this market to probably see a pullback as we are at the high end of the Williams percent R. So let's just clear the screen, go to our next market. By the way, I hope everybody had a great weekend. And we've got some very interesting markets coming up here, and I want to be prepared to share those with you and for you to be prepared to be able to trade with them. So here we are. This is the crude oil market. This is a market that's getting ready, in our opinion, to have a big move. And we talked about this all last week. And not to beat around the bush, here's the big base we talked about, the energy field we talked about. We've seen a potential pullback to maybe 92 on the midpoint. We're looking, by the way, we're looking at the March crude oil now, not February anymore. We're out of that. We're looking at March. So we're seeing a little bit of a negative impact today. Would not be surprised to see a pullback coming to maybe the 92, 90, even the 90 level before we sort of get some support. That's the midpoint of the Donchian trade channel. So again, you just turn down here. You've got a negative divergence. You can see that right here pretty clearly. So we were looking for a pullback, and it's coming from a very, very important element. And let's just clear the screen and go to a simple line chart. I'll show you what we talked about and what we're talking about. So here we are. Here's a line chart. I'm going to scope this out further and even further than that. And we're going to draw a trend line, which you can do quite easily by placing the cursor here. So you add/edit trend line. You click on that, it puts the trend line tool right in the top left-hand corner. And we're going to draw from the highs here all the way through here. And you see how it just it's hitting this trend line, which is the fourth point. Now, if we see the market pull back, and this is what I'm hoping to see, this would be an ideal setup. So this is, you don't see these too often. When they happen, you want to really be on top of them. So we're looking for this market to pull back, possibly to this level here, and then come back up, break through this trend line, and really start to put the afterburners on the upside. And I would not be surprised if we see oil, should this happen, now it has to happen first of all, move up to the $100 a level. But first we have to see this triangle, our monthly triangle, basically turn green and move up. So very important to watch those triangles as they do show you the way, and I'll show you that in Apple just how powerful they are. So let's clear the screen and go to our next market. And the next market we're looking at is the euro dollar. Now the euro dollar is very strong. We've been talking about this bullish, bullish, bullish. We've been bullish on this market for quite some time. There's the monthly that kicked in. And let me just turn this off. Here's the monthly that kicked in right here on September 7th at 127. The market's at 133. That's a huge move in Forex. And you can see the weekly, the last weekly kicked in at 129.86. And that was the last really move to the upside. So it looks really, really nice. And even our daily, if we put the daily in, just click on the little arrows, the little triangles here. It shows you last daily kicked in at 131.37. So that's almost 2 full handles ago. Looks really good. A little bit overboard, but the trend is your friend. And the trend right now for the euro is clearly positive. So let's move on to our next market. This is gold. And remember what we said about gold. We said we're not that enthusiastic about gold yet. We thought the market was trying to build a base. I'm going to take some of these, the junction trade channel off right here, and also the parabolic. So we've got a very simple line chart. And we talked about this last week. We're looking for this market to come back into an area. We put the Fibonacci line, and we're getting into this area here. This is the area that I want us to watch very carefully. So between where we are right now, which is a 50% pullback, this sort of box right here, we want to look at that box as being an area the market's going to find support and build a base and then start to move higher. Because we've got this trend line down here. We could probably put in somewhere along the line. It's not there yet, but that's still a negative. And we're not oversold. We're sort of in the midpoint. Really, everything is not right. It's just not clear yet on the gold. So I wouldn't get too enthusiastic about either being short or being long in this market right now. So let's just clear the screen and go to our next market. And the silver and the copper, very similar pictures there. And let's just go to our next market, which will be silver. And silver, you can see it's just trying to make that turn. It hasn't made it yet. It's still 55 trading range. Don't get too excited about silver. It's not going to take off, and neither is the gold market just yet. And I want to emphasize just yet. So let's be patient and wait till we see some confirming signals with trends, and we can get on this from the long side in a really meaningful way. So moving on to our next market, and this is copper. Copper, again, if we just put a candlestick charts in here, just very simply click on the little candlestick graph, and you can change from a line chart to a candlestick graph to a traditional Western chart, which is high-low last, which I sort of grew up with, but I actually prefer the candlestick charts now. So here we are. We are just beginning to turn back down. Not oversold yet, but we still have a longer-term bullish trend on our hands. So let's just put in our Dungeon trade channels. You can see we got right up to the top. Every time we get to the top, we see a pullback, and this time was no different. So let's see how this works. I would not be surprised to see us come back down to the 360, even the 355 level, but we're not there yet. Let's just give this market some breathing room, so to speak. So moving on to our next market, and this is Walmart. Now remember we talked about Walmart last week, and what did we say about Walmart? We said sell Walmart, and it's down today. And we also said, if you remember, to buy Amazon. And guess what? Amazon's up 2.29% today. So the idea was to basically be a spread. These are the service sector. We want to be a buyer of Amazon and a seller of Walmart. I think more and more folks are going to go online to buy things. I think Walmart is going to basically turn into I don't know how to, like a giant supermarket. It's just going to sell food and other things and some other stuff that people kind of need on a day-to-day basis. But the really big items are going to be going to Amazon and the like, not to Walmart. So I think they're trying to make that switch to the online sector. I think they're too late. They've lost the game on that, and I think they know it. So let's just take a look at the portfolio, and we'll see. Last week, by the way, this portfolio, a very simple portfolio, we said to buy. Here's Walmart. This is the sell right here, sell Walmart. And it was buy here. Okay, so we're buying Amazon, selling Walmart. So Walmart's down 0.42%, and we're up 2.1%. So you're making 2.5%, actually 2.6% on this trade alone today. And last week, you made 4%. Okay, so there's going to be some adjustments, some checking around, but I think this spread, being long Amazon, short Walmart, can really change dramatically and go much in. It doesn't matter if the market goes up or down. You want Walmart to go down faster when the market goes down, percentage-wise, and you want, let me just put that up, and you want Amazon to go up dramatically when it's going the bull markets. But even when it comes down, you don't want Amazon to go too far. It's just the relationship between these two stocks, Walmart and Amazon. Okay, so that's how it stands right now. 2.6% today, 4% last week. I would say that if we see a pullback in there, but we're trading with the triangles. You see how we're trading with the triangles? We're not trying to do anything smart. We're just saying, okay, plus 100, I want to be long this stock. Minus 85, I want to be short this stock. Or anyway, that's how it goes. So let's clear the screen and go to our next market. And the next market we're looking at, of course, is going to be Apple. And let's just click on here. Minus 100. See that? That's not a good sign. Trading at 501.82. I would not be surprised to see Apple close below 500 today. Yes, close below 500 today. Now, let's just look at this very carefully, actually the last 6 months, and you'll see exactly what I mean. Okay, so we have all of our trade triangles negative. Not a good sign. For the longest time, all of the trade triangles used to be green with Apple. Apple could do no wrong. And then unfortunately, and I do mean this very sincerely, unfortunately, Steve Jobs passed, who was really the visionary, the guy who was the master salesman, the magician, the guy who knew the tricks, how to sell things, the cult of Apple. He was the cult of Apple. Now, things have changed. All the smartphones have caught up. They all have tablets now. The market that Apple created and designed has somehow is slipping away inch by inch. I think I told you the story about my son-in-law bought a Galaxy 5 phone. He knows I'm crazy about Apple. And I think I told you the story about how I didn't upgrade. I have an Apple 4S, and I didn't go to an Apple 5. Because why? My phone did everything that the Apple 5 could do. The only thing Apple 5 could do was maybe do it a little bit faster. That's all. I didn't need a bigger screen. I carry my phone in my pocket. I didn't need bigger in my pocket. So anyway, so here's what we did with Apple. So the first signal we had was right here. And let me just take this off. First signal we had here on October 2nd, 656. Now remember, the high for Apple was 700 and change. So about $50 lower, we said, whoa, we're out of here. So we took some nice profits from this point right here, from 617 to 656, about $40, which is very, very nice, nothing to sneeze at. And we were out of the market for this whole duration, this whole free fall. Then our monthly kicked in at 587, exactly a month later. And look what happened. The market continues to go down. We're trading at 501.77. We had a signal today. Remember, you want to sell it on the weekly red. The trend is red. The monthly trend is red. You only want to sell it on the weekly trend. So that came in today at 504.66. It's 501.97. I think if Apple closes below 500, it's going to spell a lot of negative for the NASDAQ. Apple makes up about 10%, 8 to 10% of the NASDAQ. So it's a huge component there. So let's watch that very carefully. The only other thing that potentially could happen here is you've got the markets a little bit oversold. Not to say I can't stay oversold. Remember, this is oversold here too. All this period here. And look what happened to the market. You just went down, 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 down. So again, that's what I'm saying. Just don't get enamored with, oh, Apple looks cheap at 500. Psychologically, it may look cheap, but the reality is the market's telling you things are changing. Apple was $100 not that long ago. In fact, let's just clear the screen off and we'll take a look. So let's just, now it's not to say Apple's going down the toilet. Don't get me wrong. But what I'm saying is that Apple, if we go to the maximum on this Apple and take some of our trade triangles off, you'll see Apple back in 2009 was a $100 stock. it's gone up tremendously because of the iPad, the iPhone, and all the new products it brought to the market. And I think the one thing I want to do while we're here, and we got just a minute left, let's just go on and do it to a very simple line chart. And let's just draw a trend line from the lows right here, up here. So this is going to be a very, very key area. I would say around the 480 level to probably find support. That's where I expect it to find support. So let's see what happens. Hey, I'm back tomorrow. Actually, I'm not. I'm traveling to New York tomorrow. I'll be on CNBC tomorrow afternoon. So if you want to watch the show, we'll post it on our web. But I'll be back on Thursday. Jeremy will be doing the updates on Wednesday, Tuesday and Wednesday.